Welcome back. I'm Pratap here. Today is the 1st February 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. It is a highly expensive training program. Some of you might be knowing the cost of the training is over 8,000 US dollars. But we are providing complete free training as part of our NeoStock software promotional activities point of view. So please make use of this opportunity. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You need to start our training from lesson 1.1. You need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one as per the training instructions I mentioned at our Telegram channel. The link to the Telegram channel is available in this video description. So please join the Telegram channel. So at the pinned messages, Telegram channel pinned messages, I provided all the training instructions. And if you learn the subject according to my training instructions, definitely you will be a very good independent trader. So please make use of this opportunity. Now let's get into the analysis of the high liquidity zones identified. This is the performance evaluation. And the previous end of the day report, we identified 14 high liquidity zones from daily and 75 minutes time frame. And we got 2 very good trades, and 2 are stopped out, and 2 zones are violated as per the concepts you learned in lesson 16 when a zone will be violated. So let's look into them. First one is a UBL. UBL is a 75 minutes high liquidity zone identified by our software. So this is the one, rally, base, drop. So this high liquidity zone is identified by our software. And we need to fine tune this zone. So go to the 15 minutes time frame. At 15 minutes time frame, here the structure is not good. But here you have a leg out. Prices are going down, but even if you draw, it is already tested one. If you draw like a drop, base, drop, 2 base candles and drop. Even if you draw, it was tested in a 5 minute zone. I will show you. Okay, sorry. And look into the distal line of this zone. Here you have a rally candle, here a rally failed ERC candle, you have a base candle, you have a drop candle. Here you have a 15 minutes fine tuned zone at the distal line. And this 15 minute zone is the origin for this entire 75 minutes high liquidity zone. So let's look into this zone, but meanwhile, this is the one why we didn't focus is this is already tested. That is one of the reasons why I didn't show much interest on this. See, prices went deep inside. So that's why our interest is on the main area where we are at to plan our trades. I'm removing this. And this 15 minutes zone, we need to fine tune with 5 minutes, because 5 minute zone is the area where you should plan our trades, fine tuned 5 minute zones. So go to the 5 minutes time frame. The 5 minute zone is also origin. to this 75 minutes high liquidity zone, the lesson 22 concept. So did you observe last 3 days continuously we are getting trades only from this concept, lesson 22. How powerful this concept. Yesterday we got good number of trades. Yesterday means Thursday. Wednesday also we got good number of trades. And this is a Friday. I'm supposed to record on Friday. Okay. So Friday's trades also we got LTF zones. Today's both these zones are based on this concept only. Lower time frame zone horizon. See here, you have a rally candle, 3 base candles and a drop candle. And this fine-tuned 5-minute zone is the horizon for this entire 5 minutes. For better clarity, let me remove this 15 minutes one. Now you see, clearly you are able to see. Rally, 3 base candles and drop. Actually, horizon is started, the horizon from the imbalance. You can also draw like this. Still you would have got a trade, even if you draw like this also. See, you got the trade. Prices entered into that. But anyway, after you get the trade, we can tell anything, right? But before getting the trade, how we are planning is very important. We have fear that we will be missing this trade. So that's why let's stick to this. If we don't get enough risk or if you don't get enough RR, then only you have to do the adjustment. You got RR, you are getting the risk is within your limit. At the time, adjusting is not really a good choice. You might be missing the trades. So anyway, here we have a rally, 3 base candles and a drop candle. And this high liquidity zone, 75 minute zone, picked up the orders. From there the formation, not only that, LOTL zone is created, again rally base drop. And today price is exactly entered into the zone. But 75 minute zone is slightly pierced. But we are within the horizon only. Our order flow is not pierced. Prices went and then sharply they were coming down, down, down and finally reached the 15 minutes target. Here you have a 15 minute zone. Rally base, rally, follow through candles. Okay. So how much profit UBL has given? UBL has given 18,160 rupees profit, which is 11.9% ROI. So this is an excellent trade. See the power of the lesson 22. It is a new concept I developed. Existing market, that concept is not there. NeoStock software development, I have noticed that concept. Then when I did the testing, that is giving a huge results. That is what you learn in lesson 22. Yesterday, majority of the trades, yesterday means Thursday. Same lesson 22 concept. Even Wednesday, same lesson 22 concept trades. Even today, both the trades, same lesson 22 concept. So, and moreover, all these majority of these trades gave very excellent ROAs they have given. So yesterday also we got 14.7 ROA, 13.8 ROA. Again on Wednesday, 27th, 28th, 18.3 ROA. Okay, so this is about UBL. The next one is FinNifty, Nifty Financial Services. That also gave a trade for us. This is also a 75 minutes high liquidity zone. Our software identified rally base drop. This 75 minute zone we should fine tune with 15 minutes time frame. But unfortunately, the 15-minute structure is not good. One, two, three, four, five, six, all these candles. Actually, they picked up the orders from this 5-minute zone. Okay, 15-minute structure is okay. I have drawn drop 1, 2, 3, 4, 5, 6 base candles and a drop candle. But within 15 minutes, fine-tuned 5-minute structure is not good. But we identified here a 5-minute zone. That we will see. First, let me show you 15-minute structure. We have a drop, 2 base candles and a drop candle with hidden body. Now go to the 5 minutes time frame. So here you have a rally candle, 1, 2, 3, 4 base candles and a drop candle. And next candle onwards, they are started picking from this order flows there. See all these candles, 5 minutes candles, they are picking the orders from this area, the origin. And this 5-minute zone is the origin for this entire fine-tuned 15-minute zone. 5-minute origin for entire 15 minutes. Exactly from the origin, it picked up the orders. Here you have a 15-minute zone as a target zone. Rally, base, rally. And if you take exactly within this origin proximal entry, you won't be getting 1:3 RR. You will be getting a little. See here, a little less. You are getting 2.73 RR. That's why what I did, I slightly moved the entry up. This is what fine-tuning the entry. I explained all these concepts in the earlier HLQ analysis videos. Slightly I moved it. In such a way, you get 1:3 RR. So from this entry, now you have to take entry. You can't take before because RR is slightly missing. And the risk is also within the accepted limit. I think risk is also around 1.1% risk is there. And 3 times reward we are getting. And we got the successful trade. When you got the trade? On this candle. Because entry reached on this 5 minutes candle. This is at 1 o'clock. Friday at 1 o'clock. And when it reached the target? Friday at 2 o'clock. It reached the target. Within 1 hour the trade is completed. How much profit it has given? Fin Nifty has given 5,850 rupees profit it has given. But ROI is close to 3%, 2.9%. It's close to 3%. ROI only we got. Okay, ROI is less ROI, but still profit is a profit. This is the UBL trade, right? Here you got. See here in this candle, almost they came very close to the zone. If you exited here and immediately, because we are almost reaching near, very small percentage. Probably you might have, when prices reached here, you might have got an alert about Fin Nifty, because prices are, generally you keep alerts before prices are entering into the entry. You might have closed your trade immediately, and if you would have entered into Fin Nifty, so you would have got another 3% ROI. 2.9, close to 3% ROA. So sometimes this is the way. When prices, if you are already in a trade, you don't have a capital. You are about to reach, your trade is about to reach the target. At the same time, another trade price is about to enter into your entry level. Immediately close the first trade because almost you are reaching the target, and take the next trade. Release the funds and use the funds for the next trade. Sometimes you have to plan when you want to get more and more intraday related profits. Such kind of quick decisions you have to take. You may ask a question, suppose if I take second trade, if it is stopped out. If it is stopped out, okay. You have to accept that. Because HLQ zones, you have higher success rate compared to the failures. Only this month only we have seen a little extra stopped out than our expected. Generally 80% success rate we expect. I think this month we will get only 72 or 73% only we will get. Especially because of the first Monday of this month and again second Monday of this month. Both the Mondays, all our trades are stopped out. Black Mondays. Otherwise, our statistics would have been very good. Because of those 2 days, complete our statistics are spoiled. Both days together, I think around 7 or 8 trades are stopped out. Both the days. Both first Monday and second Monday. At the same time, this month we got very good trades. And especially last 1 week, we got trades that gave very high ROI. Of course, some stocks gave less ROI, I agree. But some stocks they gave beyond expected, like 13%, 17%, 14%, 12%. See today's trade also. UBL also has given 11.9, close to 12%. Okay, this is about Nifty Financial Services, FinNifty. And the next one is IRCTC. It is a stopped out trade. This is a daily high liquidity zone. Rally based drop. See, this zone was tested several times. And within the daily we have a fine-tuned 75-minute zone. We have a drop base and again a drop candle. Within this again we fine-tuned with 15 minutes time frame. 15 minute also we have a rally, 1, 2, 3, 4, again a drop candle. After that, see, prices went and picked up, came down. But risk is very high here. After that, prices went deep inside. And see here, almost prices reached near to the distal line, again came down, moved up, came down. During this process, a new 5-minute zone is created in the recent time when price entered into the zone. This was the recent time compared to the earlier. And here we don't have any proper zones here. But here you see, here you have a rally candle, 1, 2, 3 base candles and a drop candle. Type 2 proximal I have drawn. Generally we prefer type 2 proximal. And moreover, this zone looks like a very promising zone. The reason is, see, previously prices came near to the zone and sharply came down. Maybe the order flow is very strong here. But unfortunately today, zone is stopped out. Maybe demand is very strong. Let me tell you. Today, prices actually, they touched the type 2 proximal, type 1 proximal. Let me show you. Oh, sorry. Here we have the type 1. This is the type 1 proximal. See, earlier see came very close to the zone and came down. That's why this is a very good zone. Today it touched, gave an entry, and then came down prices, but not good enough to get 1:3 RR. I think 1:2.4 RR it reached, close to 1:2.5. But for you to make this trade successful, at least minimum 1:3 RR should be achieved. But that didn't happen. Because that didn't happen, it's a fail. And later on again, the demand again, maybe the consumed. See here in all these candles, slowly, it didn't move just like that. This candle, that means institutions keep on adding the demand. And this demand is consuming all the order flow. See, step by step it went. First here, next a little high, almost reached the distal line. Next candle, it consumed all the order flows in this zone. That way this entire zone is gone. So that means there is a strong order flow, but compared to today's demand, it is not good enough to give us a good trade. But anyway, it is topped out. So how much IRCTC has given? 14,000 rupees loss, which is a 0.9% negative ROA. See, the advantage is when we get profits, we get big profits. See, this is the smallest profit. Still, this is almost big, more than both these stopped out trades. Both together it is 2%, but the profit itself is 2.9% from a single trade. That is the beauty of our supply demand zone price action. One successful trade saves us from several stopped out trades. Suppose if this could have been your successful trade, 11 point, this amount is equivalent to many of these stopped out trades. See here, let me show you some of all these things. All the stopped out trades, how much? Because this month we have more stopped out trades. But anyway, but all these stopped out trades together, January, sorry, this is the last month. See, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is the second Monday. This is the first Monday. 8 trades on both the Mondays. So total how many? 13. Sorry, I missed the name count. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. So this month we have 23 stopped out trades. But do you know how many trades we got this month? 90 trades we got. Still one more day is remaining. Because that is yesterday. Yesterday is 31st. End of the day. Report, I am had to release the report. Probably by end of today, because I am adding new data for the new stocks added into the F&O. We got 90 trades this month. Out of these 90, 23 are stopped out, remaining all are successful. And all these 23 trades together, you know how much? 24.8%, 24.8 ROI, all this together. You know what is the average? The average is minus 1.0. That means minus 1% ROI. Average. All these trades together. See? Okay, total is 24.8, all that together. Just imagine these two trades you would have taken. Kalyan Jewellers and UBL. Both together, you know how much? 26.6% ROI they have given. Both together. And all the 23 trades together, the amount you might be losing the whole month might be 23. How much? 24, right? 24% or something. 23 or 20? Yeah, around 23%, close to 24. But here only these two trades together you got 26.6%. That means you are in profit just because of these two trades against 23 trades. That is the beauty of supply demand zone price action. Two very good trades might have saved you from 23 stopped out trades. Let us assume you have taken 25 trades. Let us assume. It is a hypothetical scenario. Just I am telling you. You took total 25 trades out of these 90 during this month. All 23 you have taken. Let us assume. All the 23 stopped out trades. Remaining 2 trades are these 2 stocks. Still you are in profit. Still you are in 2% extra profit you would have got, 2% profit. But you won't see such kind of worst. I'm just telling you the worst thing we have seen in the month. All 23 are stopped out. Of course, some of the stopped out trades are happened continuously at the same time. Even then, let us assume you are taking a trade, getting stopped out. Took the next trade, stopped out. Took the next trade, immediately stopped out. Within 5 minutes, you got all 4 stopped out trades. Like that, it happened in both the Mondays, first Monday and second Monday of January month. And remaining all these stopped out trades also you have taken. Still, you are in profit just because of these 2 good trades for you. This is the worst case scenario. I know it is a hypothetical scenario. It won't happen. But still I am telling you, to make you understand the beauty of supply demand zone price action, following the risk management, following the risk reward, minimum 1:3 RRR, your 15 minutes target zone. So that's the reason why you must understand. Sometimes when your trades are stopped out, you should not get disappointed. Because I have seen a couple of members, when a trade is getting stopped out, you are getting some disturbance. But when the trade is successful, you are not understanding whatever the money you got from the trade, you should be prepared to, even if you lose, it is okay. That kind of mindset you have to build. One trade, successful trade, money you save you just keep it aside for the whole month. That money you have to use for stopped out trades. Just reserve that money. Remaining all successful trades, enjoy the profit. That one you saved, that one profit money, whatever you saved, you prepare that money you will be losing in case if there are any stopped out trades during that month. That way you have to prepare yourself. One trade will save all the stopped out trades during the month. Especially I am talking about high liquidity zones for their success rate point of view. You have seen, right? Just all the trades, 23 trades, whatever the total money, that is less than these 2 successful trades. Both are very good trades, UBL and Kalyani Jewellers. Even other trades, continuously you got so many profits. One day you are taking a trade, getting closed, and next trade is starting. That kind of trades happened some 3 days back, if I am not wrong. I think maybe on 27th and 28th. Yes, 27th, full of trades. See, every trade is successful on 27th. Some of you also commented in the comment section. We are taking the trade and we are getting new trade. We are closing the trade, we are getting the new trade. That was the situation on 27th. Same is the case on 28th. Only one stopped out trade on 28th. Remaining all see. And moreover, both these days they have given a very good ROAs, all these trades. And the majority of these trades, especially last 3-4 days, lesson 22 concept, lower time frame zone as an horizon. Of course, fine-tuned 5-minute zones also gave you good trades. Especially on 27th, whatever the trades you got, majority of the trades, they are very easy to find the trades. Because the zones didn't have multiple order flows. Just right away, only one order flow reached that fine-tuned area and immediately either prices were going up if it is a demand zone or going down. And I think on 27th all are long trades only. And moreover, I think 27th January is a bearish day, right? 27th January. Let me look into the Nifty. See, this is the 27th January. It's a bearish day. See, with the gap down, market is down with gap down. See, 27th January, we got long trades, all long trades. First, second, third, fourth, fifth, sixth, seventh. 7 trades you got on 27th January. All are successful trades. The only least ROI is a NMDC, 3.7. I think one more idea. Remaining all they gave very good ROIs. 8.5, 7.4, 6.4, 5.7. On a bearish day, how our software is working. So that's why the point I am trying to tell, why I am talking so much on this level is, especially new members, when you get 10 successful trades and 1 failed trade, you are always thinking about that failed trade. You enjoyed the 10 trades that you got success. That means the one stopped out trade is dominating completely, taking all our happiness. And you are thinking about that. Next, immediately after stopped out trade, you might be getting another trade opportunity. You are not taking the trade opportunity because you are just thinking and simply, ideally, you are just feeling sad about the stopped out trade, not doing anything, not looking for the other trade opportunities. Don't do that. Sometimes your trade will be, many times, majority of the trades, once you take, probably within next few minutes only it will stop out. It won't take much time. Like making you wait for 1 hour and then stop out. Rarely it happens in high liquidity zones. High liquidity zones, mostly next 5 minutes or 1 minute or maybe maximum 10 minutes, your trade will be stopped out. 10 minutes means that is a huge time. So when your trade is closed, stopped out within 5 minutes, what happens? Your money is getting released immediately. Small money you lost, okay, from your capital, I agree. But still your money is released. Same money will be useful for the next trade. Probably after 10 minutes or 15 minutes or maybe after 30 minutes, you might be getting opportunity in some other stock. And with the sadness of losing that stopped out trade, if you don't look into the next opportunity, what will happen? The next opportunity will be giving you very nice profit. If you would have taken the trade, you might have been recovered from your earlier loss. Still you would have got the extra profit on that day. See what is happening. That is the way many people, especially in the early stage, you will be missing the opportunities. In the earlier HLQ analysis, in the long back means maybe some 6-7 months or even before that, every day I used to tell, if you miss a trade, if your trade is stopped out, look for the next opportunity. Don't run away from your system. You may get another opportunity. Rare situation you will be seeing some bad days. Such kind of bad days we have seen so far 3 times only for the last 15 months. Some 6 months back once happened, except one trade, remaining all the trades were stopped out on that day. Some around 4 trades we got, 3 are stopped out and 1 is successful. Such kind of situation I have seen some 6-7 months back. In the last 15 months. Now again 2 times during this month I have seen. The first Monday of this month and second Monday of this month. Almost all our trades are stopped out. You have seen 8 stopped out trades. Only from those Mondays, 2 Mondays, first 2 Mondays of this month. Except that, remaining all, we got very good trades. So this is one lesson all the especially beginners should learn. Experienced people who are doing trading for the last 6 months or 8 months, already you understood everything, you are managing everything. Stopped out trade you are taking in a normal way. How you treat when you get a profit, the same way you are treating when one of your trades are stopped out. Because compared to the money you captured earlier, the stopped out trade, whatever the money you lost, it is just nothing for you. It's almost negligible for you. Because you got very good money for the last 6 months or 8 months. But newcomers, it's not like that. You are in the early. You always take the pain, even if one trade is stopped out, even after getting 5 successful trades. So this is one your trader's mindset has to be changed. See, this is a process actually. Like your, I don't know what is the right word to tell. It's like a phase by phase shift will take place. Yeah, the right word is the transformation. The transformation of a trader from beginner to professional level, how you evaluate yourself. That transformation will happen phase by phase. So that's why it's not nothing abnormal. Getting pain in the early stage, it's not an abnormal. It's normal only. But if you realize quickly, then you will move on to professional level so fast. The transformation will take place quickly. So that's why many times I am talking about this point. Okay, this is one stopped out trade, and another stopped out trade is REC Limited. REC Limited is a 75 minutes high liquidity zone. This is a drop, base, drop. And this one I fine tuned with 15 minutes time frame. See, we have excellent drop, base, drop. 3 base candles, 15 minute zone. This is again fine tuned with 5 minutes time frame. Let me hide the candle, you will get the clarity. See here, we have a drop candle, medium size candle. You have one medium size base candle, second medium size base candle, third medium size candle is a leg candle. Okay, it can be part of the base. You already learned. If earlier base candles are there, you can keep a leg candle in the base. And then you have a drop candle is there. And moreover with pro gap it is. So definitely this is a very good area. We should not miss such kind of trades. But today it is stopped out, that is a different story. So easily it's gone today. Maybe on this particular stock, institutions might have cancelled their order flows. There could be some reasons, they might be knowing those reasons, we may not be knowing. And moreover today demand is much stronger. Earlier you have seen what was the stock we discussed, the stop down, IRCTC. IRCT was not violated so easily, right? Before violation, it already achieved close to 1:2.5 RR. And failed to reach 1:3. After that again moved. Again few candles prices stayed in that within the order flow, slowly consumed the order flow and finally violated. But that is not the case here. Go to the 1 minute time frame, you will understand how easily it is violated. Just 1 minute, the whole thing is gone. This is 9 o'clock 22 minutes candle. Within 1 minute, entire order flow, how it consumed? Maybe they might have cancelled the orders. Why they cancelled? They have their own reasons. We may not be knowing. Only such kind of situation you will see high liquidity zones. Now you may ask a question, if every time institutions cancel the orders, we will be getting losses. That way you may say, right? That's actually a silly question. Why? Because if every time they do, we won't get 80% success rate. Rarely we see such kind of situation. That's why they comes under 20% category. Otherwise I would have given 100% success rate. Rarely we see such kind of situation. The 20% level. The 20% level chances are there. That's why we are claiming 80% success rate to our high liquidity zones. Okay. So this is the one. See, such kind of zones stopped out, what is the advantage? Actually, such kind of stopped out trades are very good for us. Why? Because our capital will be released. See here, within 1 minute, our capital, you took the trade, same candle, same time frame, this zone is stopped out, immediately you would have exited, everything happened in 1 minute. You took the trade, after that few seconds, it stopped out, then you might have exited. All these things might have happened in some seconds time. So your money will be released immediately. Now the same money you might have invested in either UBL or what is the other one we got? Fin Nifty. One of those you invested your money and you would have got the profit. So these are all the things you should understand. Okay. And a couple of stocks are violated. Anyway, I didn't remember those stocks violated, but I will show you. Let us look into all the stocks one by one. First one is Bajaj Finance, a daily high liquidity zone. Rally base, rally with hidden body. It is a rally candle. And huge wick is there, large candle, but it is having sufficient body with hidden body. Prices came close to the zone, but they didn't reach. How I fine-tuned? Go to the 75 minutes time frame. Here I have, let me hide, you will get clarity. This is a rally candle. You have 1, 2, 3 base candles, and then again a rally candle. And that same area, 75 minutes area, fine-tuned with 15 minutes time frame. In the 15 minutes time frame, here you have a drop candle. You have 1, 2, 3, 4 base candles, all these 4 candles, then a rally candle with hidden body. See, after hiding that candle only, we got clarity about all these candles. Okay, this 15 minutes area again we need to fine tune with 5 minutes time frame. In the 5 minutes, this area I am not comfortable with these candle structures. Instead, what I have seen is here we have a rally candle, 2 base candles and a rally candle. This 5 minute zone is the horizon for this entire fine-tuned 15 minute zone. Maybe that way we can give Here also we have a rally, 2 base candles rally, but I am not convinced with this leg out candle. Otherwise this also will be origin for this entire 75 minutes fine tuned area. But I am not convinced. I don't think you will also get convinced. This is a medium sized candle. It's not, at least a little bigger it should be. Okay. So this rally base rally is the origin. So probably this is the area we should focus. Maybe you may say here also we have rally, some 2 base candles we can draw. That way you can tell. But still this is the origin. So you can't combine both. If you combine both, risk will improve. You have only one choice. This is the area you should plan your trade. That's it. Otherwise you have to leave this stock. Look for some other stock. And next one is Canara Bank financial, home financial. But this is a daily zone. I didn't fine tune at all. See, this is the zone from the year 2023. May 2023. Definitely we can't access 5 minutes data. So I thought waste of time focusing on this, because we have so many other stocks. Anyway, price also did not reach. And this is the one, Metropolis. This is the one I mentioned at our Telegram channel. This is a very good example. How many of you remember your lesson 25 concept? A special price action in leg out candle. So here we have an example for this. But before that, before I get into that, this is a daily zone. When it was created, this daily zone, here you have a drop candle. This is not a base candle, drop. At the hidden body, this is a drop candle. You have 1, 2, 3 base candles and a rally candle. And this is the daily high liquidity zone identified by our software. This one I fine tuned with 75 minutes before getting to the recent price action. First let me show you the order flows here. Here you have a fine tuned 75 minute zone, drop, 2 base candles and a rally candle. Drop, base, rally. And remaining order flows are not good, and moreover prices already reached up to here. So no need to look in this area. And then again fine tuned with 15 minutes time frame. In the 15 minutes time frame, you have a rally candle, 1, 2, 3, 4 base candles and a rally. This leg out is not really great, but some extent compromised. I want to see any fine tuned. And anyway, there is no proper fine tuned structure. Have you noticed there is no 5 minutes order flow here? Probably this will be violated easily. And there is a rally base rally, but it is outside the zone. So we can't trust this. May work, but we can't trust. And there is again drop, 3 base candles and a rally. Drop, base, rally. This is another 15 minute zone. And here this entire daily zone is having a lower time frame horizon, but no 15 minutes, 5 minutes is there. But have you noticed the 15 minutes candle? Rally candle, rally candle. Do you remember the concept? The higher wick of this rally candle, lower wick of this rally candle, there is order flow. Mostly such kind of order flows are very strong. Do you remember that new supply demand zone concept? This concept only between leg out candles only we draw the zones between the wicks. So exactly 5 minute zone here we have an order flow, and that order flow is the origin for this entire daily high liquidity zone. See, it picked up the orders and entire rally has been went. So that's why I have drawn this origin, lower time frame next time. But before that, all these order flows has to be violated. Then only we get trade opportunity. We may not get the trade here immediately. But anyway, the zone you will see clearly in 5 minutes. Let me go to the 5 minutes time frame. We have two 15 minute zones. First 15-minute zone, we didn't draw any 5-minute zone. See why we didn't draw? We have a rally base rally, right? When we have a rally base rally, why I didn't draw? Maybe prices already entered in this zone and this would have been violated. That's why I deleted this. Let me show you. See, that order flow worked very well. See, it gave a test. See the movement, it gave very good move. Again, second time came close to this. Again, a very good move it gave. And after that, it is violated. See, in the recent price action, this is violated. Recent price action also, you see, first it again gave it, almost came close to this. Because we have drawn the type 2 proximal, came very close, again moved up. Multiple times this 5-minute zone worked as a high liquidity zone. And the fourth time it is violated. Once it is violated, you can't keep. That's why I removed this. And here I didn't draw because this is not convincing. There is no proper leg out. But here I have drawn, see, rally, base, rally. From this 15-minute zone only I have drawn. Because this zone is overlapped at the proximal line. Rally, base, rally. So the newly created order flow in the recent price action. So this is the reason why this 15-minute zone is not having a earlier order flow. I removed it. But you have to observe how perfectly they worked, the order flows. Am I doing any magic? No, I am not doing any magic. The concepts you learned only, they are working as it is perfectly. Okay, here I have drawn another zone. Rally, base, rally. We have a rally candle, base candle, rally. This is a fresh zone. In this 15-minute zone, we have an order flow, fine-tuned. Okay, now this is the one I am talking about. See here. Between the two leg candles earlier, we have this rally, base, rally. Actually, I would not have considered this, because this is also looking like a medium-sized leg candle. The only reason I am considering this is mainly because between two leg candles this is there, maybe I have given some priority. Actually, it is looking like a leg candle. It is not looking like a base candle. But from here it picked up the orders. So that way I have considered that. Because sometimes base candles could be tinny candles, but that is not a tinny candle. But anyway, because that is resulted, maybe some 1-minute zone, some structure might be good, but we don't have access to 1-minute data or even 3 minutes data. Okay, now the main discussion, the one I talked in the Telegram channel. Now let's go to the 75 minutes time frame. So recently when prices entered, a new 75-minute zone is created. A rally base, a big rally candle, right? Okay. Now you need to fine tune with 15 minutes time frame. Okay, we have a drop candle, you have an excellent base candle, and you have a medium size leg candle. You can keep it as part of the base, and then a rally candle. So this 15 minutes is fine-tuned 15 minutes zone is looking very good, excellent. But this is not good enough, right? We need to have a fine-tuned 5-minute zone. So go to the 5 minutes time frame. Now you will see the concept. What you are seeing here? You are seeing a drop candle. You have 1, 2, 3, 4 base candles. You have a rally candle. And then next follow through candle, it tested the zone, Prices came almost close to the distal line and then sharply moved up. See, what is the low of this candle? Low of this candle is 170 to 15. What about this low? 170 to 20 paisa. That means 5 paisa before it sharply moved. If you are a normal supply demand zone trader, what is the decision you take? This is a tested zone, and moreover prices reached so deep inside, and we can't take a trade from this zone. We have to reject this zone. Is that what we think? If you are a normal supply demand zone trader, whatever the concepts currently available in the market, go to any trading academy. They always suggest don't take trade in this zone, it is already tested. This 5-minute zone is a tested zone. Moreover, it reached more deep inside. First of all, whether it reach deep or not doesn't reach, we won't take once it is tested. That's it. That way we will leave this trade. But do you know what happened? Prices went, again came down. Then this entire 75 minutes leg out candle formation, this candle is the responsible, not this is the candle. Everything happened from this candle at 9:15 candle. Go to the 15 minutes time frame. Look into the 9:15 candle. See, this is the 9:15 candle. Go to the 75 minutes time frame. See, this is the 9:15 candle. So this 9:15 candle does the magic. How it does the magic? How I explained this concept in lesson 25. Is it lesson 25 or lesson 26? Okay, anyway, one of those lessons. It looks like tested, but actually this is the responsible for the leg out. After that, follow through candles, all these candles together, the entire 75 minutes candle formation took place. But this is the one that does the magic. That means leg out candle, obviously the order flow will be there. That is one thing. But how do you identify this order flow? So what is that I explained in lesson 25? Go one more time frame lower. Mostly you will see the order flow. If you can't find the order flow, mostly tick-wise data, it may take place. You can't have access. At least with confidence we can take a trade. But if you go to the 1 minute we have access, right? Go to 1 minute. 1 minute itself confirmed here. Sorry, now I am in 5 minutes candle. Let me 3 minutes. Okay, this is 5 minutes. Drop base rally. Look into this 5 minutes candle. Now go to the 1 minute time frame. What is that you are observing in 1 minute time frame? You have a drop candle, you have a base candle, you have a rally candle. When the drop candle? Morning 9:15. When the base candle? Morning 9:16. When the leg out candle? Morning 9:17. You draw the zone. Same zone again it is they reproduced. Same zone. Why same zone? Because when you have drop base rally, what are the rules? The drop base rally, the rule is including the leg in, base candles and leg out, whichever is the lowest, that will be your distal line. So out of these three, which is the lowest? The leg in candle is having the lowest wick. So this is your distal line and this is your proximal line. The moment you draw the zone, same zone only you get again. See, same zone, again you are getting, same thing. Just to make you understand, let me increase the thickness, color thickness. See, did you get the same zone again? But now institutions added a lot of order flow, small pro gap is there at 1 minute level. We all think this zone is a tested zone. We don't take a trade the moment you looked into the 5 minutes time frame. So we never touch this zone because it is a tested zone. Institutions want that only. They don't want retail traders interference in their order flows. But when we don't interfere, what will happen? All the institutions' orders will execute and they will be happy. Next time prices reach and again from here it will push, and you might be wondering, we means not our NeoStock student, the general supply demand zone, how a tested zone is worked very well, and that too prices went deep inside, how it worked. So that's why the concept, a special price action in the leg out. Which leg out? 75 minutes leg out in this example, the fine-tuned 75 minute zone. This leg out we are seeing a special price action. That special price action only you land in lesson 25. Always I am having doubt, is it lesson 25 or lesson 26? Let me clarify. Not lesson 25. It is lesson 26. I've been telling a wrong number. So lesson 26 I explained the concept. Okay, I clarified my doubt. See, you got an example. But anyway, and we didn't get a trade opportunity today. But it's a good lesson for you. It's a revision. Because I gave you a clue. Those who completed lesson 26, at least you would have practiced that concept. If you did not, now you have to focus on this concept seriously. So this is about Metropolis, and next one is PNB. PNB already we discussed previously. PNB is having some fine-tuned zones here. High liquidity zone. The 1 minute zone or 5 minute zone, something we have drawn earlier. From there it is keep on getting the trades. Again drop base rally created. So we are waiting for again a trade in this zone. So this is the one. We already discussed this. Previously I explained. IRCTC stopped out, we discussed, and next one is Max Health. Max Health is a daily high liquidity supply zone. We have a drop base drop, and it is already a tested zone several times, but it is a high liquidity zone. High liquidity zone, what is the characteristic? Until the zone violate, we take trades. One day it will be violated, that way our order will stop out. Until then, we will enjoy the profit. Same thing, see, all the candles, first candle, second candle, third candle. How we fine-tuned this Max Health, I don't know, I explained earlier or not. Go to the 75 minutes time frame. Here you have a rally base drop here. Rally base drop. Within this 75 minutes, again we have 15 minute zone. Look into the 15 minute zone. So this is a little, not a great leg-in, but okay. And a base candle and a drop candle. And this 15 minute zone, we have a perfect 5 minute zone. See, we have a rally candle, base candle, and a drop candle with pro gap. And this area has been tested several times. See, this is the first test, this is the second test, this is the third test, fourth test. and again 5th test, 6th test, 7th test, 8th test, recent time, again rally based drop is created. See how many opportunities this zone has given. People who are not aware of this high liquidity zone concept, what they do? Okay, this is a tested zone, they leave. But how many trade opportunities it has given, especially intraday opportunities. Several opportunities it has given. You may ask a question. Suppose our software did not list this zone, but I identified this high liquidity zone. Prices came, can I take a trade? You can take, that is what I am telling. But don't expect 80% success rate. That is the only thing you have to. Because it is a fine-tuned 5-minute zone and moreover a high liquidity zone. Every time when prices are entering, take the trade. You have to enjoy the profits. Whether software listed or not, you don't bother if it is a high liquidity zone. But one day it will be violated, you have to exit. Due to that reason, second time, third time, fourth time, we don't know how many times it will support. Suppose your bad luck that day when you are taking the trade, it is stopped out. You have to accept, no other choice. If a fine-tuned 5-minute zone is a high liquidity zone, if it is fine-tuned or not fine-tuned, if a 5-minute zone, high liquidity zone, an aggressive trade setup 5 minutes, high liquidity zone. What is aggressive trade setup? The 5 minutes high liquidity zone is not part of the 15-minute zone. Then it is an aggressive. But still the 5-minute zone is a high liquidity. You can take a trade. Even if software does not recommend, still you can take a trade for high liquidity zone strategy. Until it is violated, you can take. But don't expect 80% success rate in those scenarios. When you don't have any other options with other stocks, you can take such kind of trades. See, sometimes we have to take extra risk, right? Every time you can't expect safe trades. Sometimes you have to look for, at the time you should accept a little extra failure rate also before taking the trade. You should prepare for that. One such kind of trade happened. Wednesday, I suggested a trade. We got a trade on Thursday. But software did not list Wednesday end of the day. But Thursday, what we discussed on Wednesday, same level, the high liquidity zone, it gave a trade. The 5 minutes or 1 minute high liquidity zone. Actually, that was a 1 minute high liquidity. And moreover, I have drawn that zone in our discussion, in the live discussion only. Live discussion means at the time of recording the video, while explaining, I have drawn that zone. And suggested, next time plan a trade in this zone. And Thursday, end of the day, the software. Wednesday, we discussed. Wednesday, end of the day, software did not recommend. Thursday, it recommended. But already Thursday market, the zone gave a very good profit. And Thursday, recommended. Friday, it is violated. But we can't consider as a violated because that is a high liquidity zone. Already gave several tests earlier. What I am trying to say, if you would have taken a trade on Thursday, we would have got a very good profit. So that's why 5 minute zones, you can take the 5 minutes high liquidity zones, we can take the deviations. Maybe you can't expect 80%, maybe you can expect 65 or 70% success rate. That itself is a good, right? Especially Nifty and Bank Nifty traders, so how they are trading using our reports. High liquidity zones, they are planning the trades. They may be fine-tuned or they may not be fine-tuned, still they are taking. They can't expect 80% success rate, but at least they may work at 60% or 65% level. That is good enough. For supply demand zone traders, 50% success itself is a great profit. Because you have seen, what is that you have seen? Three failures is equivalent to one success. for 1:3 RR. Okay, this is the Max Health. We didn't get a trade today. See, such kind of zones you have to draw and keep it on your charts. And next one is MGL. MGL is also a daily high liquidity zone. Yeah, this is the one only. I was talking about MGL only. MGL we discussed on Wednesday. Look into the Wednesday HLQ analysis video. Wednesday, while explaining, we have drawn this zone, this 1 minute zone. And also we have drawn this 5 minute zone. For this 5 minute zone, 1 minute zone is the horizon. That's why I told, again plan your trade next time. See, next day we got the trade opportunity. See, after that how sharply the prices came down after reaching. Go to the 5 minutes, you will get clarity. See here. Here we drawn this during the live. Our trade plan is on this 1 minute, not on the 5 minutes. 5 minutes is not a high liquidity zone. 1 minute is high liquidity zone. And also this 1 minute is the horizon. And 5 minute zone picked up the orders from this 1 minute and came down. And I suggested plan your trade again next time on this. Because till Wednesday this 1 minute zone is not confirmed as a high liquidity zone. At least manual way of our analysis. Software might have suggested earlier itself. But anyway, my software I stopped for 5 minutes level analysis only. 1 minute I am not doing. Because 5 minutes itself it is taking close to 13 to 15 minutes time nowadays for analyzing all the F&O stocks. If I include 1 minute, definitely it will take more than 1 hour or 1.5 hours. So many candles, 1 minute candles. So that's why software is limited to till 5 minutes. 1 minute level manually we will do when multi-testing is happening. Why we have drawn on the day? If you did not listen, Wednesday HLQ analysis, let me tell you what I explained. Here I have drawn a 1 minute zone. Maybe let me show you in 1 minute time frame. You get better understanding. Why I suggested on Wednesday, we have to take a trade on that zone. There is a reason I explained. I will let me tell you once again. See here we have a rally, 2 base candles and a drop candle. This is the one we have drawn on Wednesday. And Wednesday only we confirmed this is a high liquidity zone. What is that I told you? Already 2 times it is tested. And intraday that may happen. Even normal zone also intraday it may give you multi-testing intraday. So based on that you can't confirm this is a high liquidity zone. See what happened after that. On Wednesday, we confirmed it is a high liquidity zone because it is not only gave one more test, during the another test, third test, it again created a rally based drop from the same 1 minute area. And by seeing this, we got the confirmation. This could be a high liquidity zone, and a new order flows again added here. So definitely next time at least once we will plan our trade. Because 1 minute zones, quickly they will be violated. Maybe after 3 times or 4 times. Because their lifetime is small compared to 5 minutes. Similarly, 5 minutes lifetime is small compared to 15 minutes. That is how you should understand. Okay. See, rally based drop. Not only that, why we have to take a trade in this area next time? The reason also explained, because the 1 minute order flow also reason for the creation of the 5 minutes high liquidity zone. Sorry, the 5 minutes zone, not high liquidity, 5 minute zone. See here, rally, two base candles and a drop, or maybe a bigger one. Either way you can. This 5-minute zone is created. That means this 1-minute zone is the horizon. How it is possible a higher time frame zone it can create? Maybe the order flow here is much stronger and institutions added a lot of order flow here. That's why I suggested on Wednesday. This is on Wednesday. Look into the timestamp. So Wednesday, look into the HLQ analysis on the last Wednesday. See, Thursday, you see what happened? Thursday morning at 9:25 candle, prices entered. See how sharply it came down. You know how much ROI it would have given? Not ROI, RR. Short position here, if you would have taken some entry buffer, roughly I am adding. Some entry buffer also I am adding, and stop buffer also roughly, approximately. See, we never know, it will end here. Just I am trying to measure. See, till here, till the low, it has given 1:8 RR. And 1:5 RR is very good enough for us to exit the trade. And everything happened in just 10 minutes. After that, prices were moving within this area throughout the day. And this is on Friday. Friday what happened? This is violated, finally. Because you never know when a high liquidity zone will be violated. But it happened on Friday. But if we would have taken a trade on Thursday, we would have got a very good profit. Suppose if you took another trade on Friday, it would have been stopped out. You won't bother because you already got a good profit here. At least 1:5 you might have captured. So this is what you should understand. This is how we should understand. If not 1:2 trailing stop loss, you would have exited. Here you have a drop, base, drop. Somewhere here you might have exited. Till then if you would have exited, because here stop loss is there, still 1:5 RR you would have achieved. That much profit you would have got. Even if it is trailing stop loss, because here drop, base, drop, this is failed in this candle. Because sometimes you never know where to exit. Because this drop, base, drop is violated. That is almost equivalent to 1:5.2 RR. Okay, anyway. This is a high liquidity zone. Today it got the expiry period. But is it a failure? No, because already it gave very good success earlier. And without taking, if anybody would have taken a trade, maybe some of your money you would have. Because by seeing this, we should be very careful. But you never know when it will violate. Maybe yesterday also it would have happened sometimes. Prices would have further come down. That's why high liquidity zones I am saying. Every time whenever you get trade opportunity, just grab it. Don't bother whether it is our software is listed that zone or not. If it is a high liquidity, 5-minute zone or 1-minute zones are high liquidity, then only you take such kind of decision. But at the same time you remember, that is not as per the HLQ zone strategy. They are the deviations. Because they are the deviations, you should not expect 80% success rate for such kind of trades. Maybe you may get some 65, that is itself is a good 60, even 60 is also very, very good statistic to get the profits. 60% means you get huge money in supply demand zone, success rate. Apply that kind of strategy only 5-minute zones, or fine-tuned 5-minute zones, or normal 5-minute zones, or normal 1-minute zones, or fine-tuned 1-minute zones, if they are high liquidity zones. Then you can take directly trade from those zones. Whether software listed or not, you don't bother. But at the same time, that is not HLQ zone strategy rules. They are just high liquidity zones, concepts, that's it. Okay, next one is a SBI card. This is also a daily high liquidity zone. Here our software identified this as a, you have so many drop candle, 1, 2, 3, 4, 5 base candles and a drop candle. Drop base drop, our software identified. SBI card, I don't know earlier we discussed or not, but how I fine tune, let me explain. We have 275 minutes order flows. So here drop, base, drop, this is 175 minute zone. And also here you have, see this big candle, failed ERC, drop. You have 1, 2, 3, 4 base candles and again a drop candle. This is a big candle. You have a wick from here till here. So these are the two 75 minutes, again fine tuned with 15 minutes time frame. We have a rally, 1, 2, 3, 4 base candles and a drop candle. This is looking very excellent. The 5 minutes, 15 minutes zone. And what about here? Here you have a drop, base, drop. Again, this is a big candle, drop candle. Failed ERC, but body is coming out of the zone, and dynamic view, it is a big drop candle. But this is a high liquidity zone, 15 minutes. Unfortunately, there is no fine-tuned 5-minute zone, proper fine-tuned 5-minute zone. But it is already tested several times. First time, second time, third time. Fourth time came very close here also. Okay. Now again we need to fine tune with 5 minutes time frame. And look inside the 15 minute zone. Again we have an excellent rally base drop. This is the fine tuned 5 minute zone. And in this 15 minute zone, there is no proper structure here. Not a convincing. Even if you consider this a base candle here, already that is violated in these candles. Even drop base drop you can't, because this is already till this candle is till this distal line. First of all, you can't draw a 5 minute zone here. The reason is this is a drop, the failed ERC drop candle. This is again another drop, no base candles. And this also you can't, because this is violated in this candle. And if you, maybe you may say, can I draw a zone? But this leg out I am not convincing. Here, drop, base, drop, not really a convincing leg out. But here you see, drop, base, drop. This is the origin for this entire 75 minutes fine-tuned zone. Lower time frame zone as an origin. So this is the area you can plan your trades next time. But before that, all these zones has to be violated. Maybe next time this will be violated easily, because no order flows, or institutions may create a 5 minutes rally based drop and push the prices down. That possibility is also there. But before that, here we have an order flow, rally based drop. This was our actual trade plan, but prices did not enter into the zone. See the daily candle. So that's why we didn't get any trade in SBI card. Next one is a TI India, Tube Investment of India. This is also a daily zone, rally to base candles and drop. This one is fine tuned with 75 minutes time frame. Here we have a failed ERC drop, 1, 2, 3, 4 base candles and a drop candle. This is the 75-minute zone. Within that 75 minutes, we have a 15-minute zone. Failed ERC candle as a rally, base, drop, and this zone is tested twice. Not only tested, while testing you see rally, base, drop is created. Here also failed ERC drop, maybe looks like that. So that's why this is looking like a high liquidity zone. See, by seeing, because one of the members asked this question, if LOTL is there, is it a high liquidity zone? No. There could be 80% chances. Because high liquidity zone identification, the special algorithms has to be executed. But manually what I observed is many times high liquidity zone area, LOTL zones are getting created. But wherever LOTL zone is created, it may not be high liquidity zone. Please remember. Every time LOTL is created, it may not be high liquidity. But in high liquidity zones, generally LOTLs will be created. You have to understand my statement. It's a logical statement. So that's why 80% only you have to tell. 20% they may not be high liquidity, they will be violated easily. So don't confirm 100%. Because I remember one of our members recently asked this question. Wherever rejections are there, can I consider high liquidity? No, rejections won't consider high liquidity. Later on it may form. It may form. Multiple times rejections are happening. So manually it's not easy to identify high liquidity zones. But some extent you can compromise and you can confirm. Hope you got clarity. When I am saying all these are all high liquidity, I am just compromised some 20% level. Maybe 80% confidence. I am saying this could be high liquidity. That's why I always use the word it could be, not must be. Next one is Zydus. This is also a daily high liquidity supply zone. We have a drop, 2 base candles and a drop candle. This one is fine tuned with 75 minutes time frame. See again 75 minutes you have a drop, 3 base candles and again a drop candle with hidden body. Again 15 within the 15 minute zone we have. See here we have a drop candle. You have 1, 2, 3, 4 base candles and a drop candle. Actually I considered maybe this is a rally. Not really actually, but okay. Yeah, I think this is also part of the base. Yes, because the low of this candle is bigger than this. Anyway, this is the rally, 3 base candles and a drop. This is the 15 minute zone. Within this 15 minute zone, 5 minutes level, I didn't find maybe a proper structure here. Rally, 3 base candles, maybe this is, see this candle I am not convinced as a medium size base. Let me hide this large leg out candle, then you get clarity on these candles. See? Now do you convince this is a medium size, I want to keep inside this zone? Not really. See the length of this candle. From here to here. First base candle, second base candle, both are part of this zone. Third base candle, a portion. Remaining portion, it will fit within this wick. That means all the 3 base candles, whatever the length, same length this candle is having. When it is having such a big length, how do I accept it is a medium size and I compromise and draw the zone? You got my point, right? That's why I didn't draw a 5 minute zone here. But the moment you see big candle, all these are all looking like small candles. Easily we can draw rally, 4 base candles and drop. That way we feel. That is the biggest problem in this, the visual representation. You know, software, the advantage is it won't bother about all these lengths. It won't look into the visuals. It look into the statistics. the calculations, mathematics, and then it will confirm the candles. And that too a complicated logic I developed for that. So that means this zone will violate easily? No, because here I identified a drop, base, drop. And this drop, base, drop is acting as a high liquidity zone. See, it is multiple times. First time, second time, again third time, again fourth time. And also this 5 minutes high liquidity zone is also horizontal to this zone. This, this 15 minutes fine-tuned as well as this 75 minutes fine-tuned zone, both together. This 5 minute zone is the horizon and also high liquidity zone. So what we can do is, for the risk management point of view, can make it type 2 proximal entry. Drop, base, drop. Next time prices come, here we can plan. That was the trade plan, but prices didn't reach. Same plan we did for UBL, same plan we did for, I did it for Fin Nifty. Fin Nifty, the same plan executed, but this stock prices did not reach, that's it. See how every time I am focusing on this concept, you have to understand. You may think, okay, there trades happened, but here trade didn't happen, right? But how we planned? Because this is the concept I explained to you, and this is the concept I developed. So how do I ignore this concept while analyzing the stocks? If I am ignoring, means there could be some other strong reasons behind in understanding the candle's price action. Maybe the candle may not be a proper base candle. Okay, next one and the last one is remaining all we discussed and pending, NCC. NCC is a 75, it is violated, right? But we predicted this zone will be violated. Why? First go to the 75 minutes time frame. How our software identified? It identified as a drop candle. This is the drop, 1, 2, 3 base candles and a drop candle. This is the way we have drawn this zone. And this one fine-tuned with 15 minutes time frame. Here there is no proper 15 minute structure here, but here we have a proper 15 minute structure, rally, base, drop. Okay, now this is fine-tuned with 5 minutes time frame. In the 5 minutes time frame, you have excellent failed ERC candle as a drop candle, base candle, drop candle. And this zone is tested, type 2 proximal is tested. Once came very close to the zone. You can't say it is a high liquidity zone. Maybe if LOTL is created, I would have considered this zone. Why I did not consider here? See, it is tested. It is also almost, why can't we say it could be a high liquidity? Why? Because everything happened same day. You may say here it is looking like rally, base, drop here. Maybe. But see, already consumed the orders here, from this area order flow. And still there was a strong order flow here. Today you see, it holded for 2 candles here within this area and pushed some extent. But you won't get RR. But what institutions did? This time they increased the demand. Added a huge demand and violated this area. Maybe institutions decided they have to break this zone. See, 2 candles continuously, it was the equal demand and supply here. That means they are keep on adding the demand, and existing supply is resisting the prices. Some fight happened with it. And finally, imbalance took place here. That means demand exceeded the supply. That means still a strong order flow is there in this area. If this demand zone was not created, it would not have violated, it would not have been violated. It might have given you another good trade. But anyway, it is a tested zone. Even if you consider high liquidity, already it is tested. It gave the profit. So that's why we can't consider this is a failure. If you take a trade, maybe your trade would have been stopped out. But here I'm calculating the performance of our zones. You should not forget that point. This zone already gave good profit. Here and here also with small entry buffer, you would have got a very good profit here also. And both trades happened on the same day, on 30th. See, this is 30th January 2025. It is tested and then came down. At 12:25, it reached, might have given you good profit somewhere here. Again, same day, at 13:20 gave, again came down up to previous low, a little below that it has given. Okay, anyway, NCC, we know that this zone will be violated. That is what happened. Okay, we had a big discussion today because it's anyway holiday. You have time to listen. Fine tuning of all these zones are important because sometimes freshers and all who are practicing, you should understand how I am fine tuning all these zones. Similar kind of mindset you should also develop. So this is about the end of the video. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.